And I'm Sameepa. Shetty, the show is Market Movers, the one that sets you up for your trading day.
Global markets been reacting to what came out from the Fed?
Well, not positively, I must say. It is all about the Fed and the operation twist, well, that they plan to extend. And, well, US equities have not reacted positively to it. They were down, in fact. The S&P 500 down about 0.2%. Look at this. The Fed extends operation twist. It was supposed to end at the end of this month. Now it will end by December. What they have planned to do is buy $267 billion worth of treasuries more. Commodities did not react positively to it. The S&P GSCI Commodities Index was at the lowest level since 2000. And that was thanks in part to look at where crude is. NYMEX crude at an 8-month low, $80 per barrel. These are not levels that we have seen in this entire year. So the question really is going to be whether or not our Nifty is able to hold that 5100 sort of level in trade today, Priyank.
Some kind of disappointment.
Stocks surged more than 2% across the board, with the Dow and S&P 500, in fact, logging their best one-day gains in 2012, amid growing hopes that central banks around the world will implement further measures to support the global economy. Some strength coming into the euro as the ECB held those interest rates. First time ever, ECB President Mario Draghi saying that all problems of the world are not thanks to Europe, and he is more importantly calling for concerted action. Lowering them further would mean that Spain would go into junk, according to Moody's. However, those Spanish equity markets actually rose. They were up about 1%. The CAC and DAX, on the other hand, saw cuts. Italian yields for that one-year debt were at about 3.9% versus 2.4% in their previous debt auction, which happened in the month of May. Exactly flat. So clearly seems like equity markets are not wanting to take positions ahead of that EU-Brussels meet that begins today. That's going to be an important monitorable. Equity markets slowly but surely giving up many of their gains. Let's talk about currencies now. The euro, some strength was witnessed in the euro versus the dollar, but still languishing at that 1.24 sort of level. Remember, there is pressure on Angela Merkel to say yes to those shared euro bonds. However, she has said not in her lifetime. Let's see what those European leaders finally do decide to do at their two-day meet in Brussels. The dollar-rupee pair, where the rupee is showing some strength after languishing at about 57 and beyond. It is at right now at 56.9. I can tell you that even the Korean won and the Singapore dollar today have shown some signs of strength. Since we're on the topic of fund flows, EPFR is out with its global fund data news release. Interesting points being thrown up there, but to discuss all that and more, we're right now joined by the global markets analyst of EPFR, Cameron Brand. Good day to you.
Good morning.
Good morning. All right, let's first talk about this sort of risk-off scenario, which has actually led to a whole lot of money coming out of equity funds, nearly about $7.7 billion based on your research, and bond funds showing you inflows of about $5 billion. You reckon this sort of risk-off or risk-averse trade is going to continue in, say, the third quarter as well?
Yes, I think it is, because
the post-Brussels scenario, one of two things could happen, Cameron. You could have the fact that they deem these European sovereign debt as not that risky anymore, given the fact that the European leaders are moving to curb contagion over there, and money does flow into more fixed income securities, or probably they take a balanced view and money starts flowing into equities as well. How do you reckon this is going to play out? The money that could come into the European markets. Let's also talk about the spill-off effect on emerging markets. We've seen about $8 billion of money coming out of emerging markets like Asian markets. So how do you think the situation is going to pan out for Asia and specifically for India? All right, so Chinese data points are going to be important for money to continue to come into Asian markets, or, well, it hasn't in this particular year. One quick word, Cameron, finally. Do you reckon money is going to continue to flow into these gold-based funds, or is that story pretty much over now?
It's going to be over for a while. But obviously, this is a multi-stage process.
That was the head of global markets research at EPFR. Interesting perspective coming in there, but that's all what we have the time for. And first up, First Rate is coming up next to pick up all the market action on the other side of this quick break. Thanks, one more. You have the European markets who are continuing from where they left off. Really, the optimism coming in from the fact that manufacturing came in higher than expected. And the big question that the markets are asking, will they or won't they? This is the screen right here. I'm, of course, talking about the ECB. The rate decision happens Thursday. FTSE, CAC, DAX, all higher. Marginally, though, they are cautious before that particular event, although the bets are rising that the Bank of England as well as the ECB will move on to easing. And our own markets, like you pointed out, Mini, 10-week high for the Nifty. It had breached that 5,300 mark in trade. It was holding up above that level. However, mild pullback right now. 52.94 is the sort of level we are seeing right now. The mid-caps are marginally outperforming the broader markets. But really, the pack in focus has to be the telecom pack. Bharti Airtel, the largest telecom operator within the country. Idea, Reliance Communication, all rallying after that TD-SAT decision. Remember, 67,000 crore rupees on stake here. You've got the 3G decision which came in. It was a split verdict. Finally, another big positive cue coming in, the fact that the rupee has strengthened in line with what most other Asian currencies were doing right since early morning. Right now, the rupee is sitting at a 6-week high, 54.85. This might just bring smile to some corporates, most definitely.